Positive movements on the markets, but really a dearth of news in the market today to guide direction.
Yeah, I guess if you're not a golf fan today, there's not much really to focus on. We've hardly seen 2 billion rand go through the market just recently, and I really think that it's a sign of the times. We have found that market is slowing down news-wise, and certainly also a lot of people starting to look forward to their December holidays.
And of course, I'm sure lots of people looking forward to the Nedbank Golf Challenge at Sun City this weekend as well. Nerina,
absolutely.
Nerina, looking at that gold price, $1,226.10 at one point this morning, so it really is onward and upward for the gold price at this stage.
There's very strong momentum still in the gold price, and it's certainly not just dollar weakness related, although the current weakness in the dollar certainly is playing a part in that. But I think this is a continuing story that we're finding in terms of risk aversion and an indication by investors that says they're not keen on paper-based assets, paper-based currencies that we're seeing a dearth of, and certainly they much rather go for a physical asset or a tangible asset such as gold, and this just leads to lots of physical demand for the precious metal.
And do you think this demand is going to be sustained going forward? What levels could we see gold rising to?
I think we've seen a very good performance out of gold so far, but it's certainly getting quite toppish. We are getting quite concerned about, and if I say concerned about the dollar, not about further dollar weakness, but we think that maybe the dollar might be reaching an interim weak point, and that we might actually find ourselves that the dollar strengthens from current levels. If that happens, that's certainly not going to be positive for the gold price and for many other commodity prices as well. Some of the news flow that we've seen this week has been quite interesting in the sense that the news flow out of the US tends to be better than expected, and many of the news coming out of the Europe and UK in particular also is not that positive. So on a relative basis, we're finding currently that maybe the US starting to look slightly better than the UK and Europe, and we might actually find that there's leading up to the Christmas season that there's more of a flow from money out of the emerging markets and certainly also Europe and UK zone into the US. That certainly will lead to a strengthening in the US dollar and will not be good for the gold price. So I think we've had a very good run, but maybe it is time to say thank you for the good run and let's maybe bank some of these profits.
Well, Nerina, a week ago the markets were pulled back by that shock announcement out of Dubai that it could possibly default on its debt, but we seem to be looking past that. It really seems to have turned into a non-event.
Yes, I think the biggest story of this week is probably the extent to which Dubai turned out to be a non-event. Of course, the news came out during Thanksgiving holiday in the US, so we never really had an opportunity to see the extent to which the US market and US investors would react to it. By the time they returned to the market in full force by Monday, we've had lots of reassurances out of the Middle East, and the US market took to this to be a good sign, and really Dubai turned out to be a non-event. Whether this really is a non-event, I think only time will tell. At this stage, I think the wave of money and liquidity that we have worldwide, and this is not just US or dollar based, this is very much first world developed market liquidity that is still around. This wave of money looking for a home is much stronger than the nerves that we saw coming out of Dubai, and I think it just very quickly swamped any bad news that we had out of Dubai late last week.
Well, as we said, Nerina, very little news on the local front today. We did have some announcements coming out of Sanlam and Liberty, though. Sanlam, after the bell last night, an operational update for the first 10 months of its year. Liberty this morning announcing that it was entering the Kenyan market. A small deal, though, but possibly interesting for Liberty going forward.
Yes, if I may start on Liberty, I think we find this a very interesting deal because it certainly points to greater cooperation between Liberty and Standard Bank. They are buying this CFC Investments, his operations in Kenya and Tanzania, from Stanbic, and then also a specific share issue to them. So yes, although it's a relatively small in the grand scheme of things for Liberty, we find this quite a big indication in terms of the change in relationship relationship between Standard Bank and Liberty. Now, what we will particularly be interested to see is the extent to which this change in relationship might actually spill over onto the South African insurance market, and if Standard Bank is actually prepared to give up some or all of its insurance and wealth management operations to Liberty, that will certainly be very, very positive for Liberty. So we'll certainly watch this one with interest. If we turn our attention to Sanlam, a very good trading update from them. It was a 10-month update, came out slightly better than we expected. New business volumes up, and certainly a lot of positive points coming out of there. Business margins slightly good, good cash inflows that they've still got. Retail is still looking good. The investment markets have certainly turned the corner. Still not performing spectacularly, but certainly better than it's been in the past. We're finding that both these companies are certainly trading still along with market at a discount to its embedded value. But of course we must bear in mind that in the case of life assurers, their embedded value is very closely tied to the performance of the capital markets, both equity and bond markets, and with the strong performance that we've seen in the markets in recent weeks and recent months, that certainly boosted the embedded values of our life assurance companies quite significantly.
Well, Nerina, just perhaps as we head towards the end of the year, reviewing what we've seen on the JSE this year, we've obviously seen quite strong growth in the all-share index, but of course some stocks doing better than others. Anything stand out for you, Nerina?
It's quite interesting having a look at the performance year to date, because we certainly see some stocks that we wouldn't expect to see, certainly amongst the top performers. I don't think many people would venture, when you ask them which has been the top performing top 40 company, that it was actually Old Mutual. Now obviously that comes off a very low base, but I think it tells us a story about how we might approach our investments for 2010. Old Mutual started the year at an extremely low base. R7.60 was the share price, and it's almost doubled. It's 85% up from that level. No dividends was even paid, but very, very strong capital gains. On the negative side, when we look at the stocks that didn't perform very well, we see a lot of companies that had rights issues, and specifically there, I think of Liberty International, I think of SAPI, look at Growth Point, and we look at these companies, and then you have to ask yourself, are the declines in the share prices justified? And I think in the light of the rights issue, they certainly are. But then it's about asking yourself, do you buy into the fundamental prospects of these companies for the year ahead? And if you do, then certainly I think that presents great investment opportunities for 2010. We also see Harmony and Telkom as two of the laggards in the performance year to date. Harmony actually being the worst performing top 40 company, and this in the light of a gold price that has done as spectacularly well as it has. So I think that's certainly one to visit a little bit more carefully and say to what extent will the strong gold price translate into better profits and better earnings for Harmony.